April 1st, 2026, we got hacks, quantum threats, and Wall Street going full degen. Let's go. Quick shout out to today's sponsor, Compete Token, the gaming crypto that actually has real games. Link in the description. $285 million just vanished from Drift Protocol, and Solana DeFi is in full panic mode. The Solana-based trading platform confirmed an active attack today, telling all users to immediately stop deposits as over $200 million fled the platform in a matter of hours. This is shaping up to be one of the biggest DeFi exploits of the entire year. Both CoinDesk and Decrypt are covering it, and the Drift team is still investigating how the attacker got in. If you had funds on Drift, check your wallets right now. This is not a drill. Google just moved up the Doomsday clock for Bitcoin's encryption, and the numbers are terrifying. New research from Google Quantum AI says they could crack Bitcoin's cryptography with 20 times fewer qubits than anyone previously thought. We're talking under 500,000 physical qubits. Ethereum researcher Justin Drake says there's now at least a 10% chance a quantum computer cracks a private key by 2032. Google also warned that Ethereum's account model is even more vulnerable to what they call at-rest attacks, where a hacker doesn't even need to race the blockchain. Google is basically begging the crypto industry to adopt post-quantum cryptography before it's too late. Moody's just rated a Bitcoin bond, and this is genuinely historic. The credit rating agency issued the first ever rating on a Bitcoin-linked bond out of New Hampshire, which means Bitcoin is now officially part of the traditional fixed income world. Think about what this means. Pension funds, insurance companies, endowments that can only buy rated debt now have a pathway into Bitcoin exposure. This is the kind of boring institutional infrastructure that actually changes markets forever. Franklin Templeton just went full send on crypto. The 1.5 trillion asset manager launched an entirely new crypto division today by acquiring a firm called 250 Digital and snapping up a coin fund spinoff to build out their investment offering. This isn't some tiny pilot program. This is a dedicated crypto business unit inside one of the biggest asset managers on the planet. When a firm managing 1.5 trillion says we need a whole division for this, you know the institutional wave is real. The Department of Justice just dropped the hammer on a massive crypto wash trading ring. 10 foreign nationals got charged today for running a scheme that artificially inflated trading volumes to manipulate crypto markets. Wash trading has been crypto's dirty little secret for years, exchanges pumping fake volume to look bigger than they actually are. The feds are clearly done looking the other way. If you're running fake volume in 2026, the DOJ has a cell with your name on it. Jamie Dimon, the guy who called Bitcoin a fraud, now wants JP Morgan in prediction markets. The banking giant is looking at entering the prediction market space as competition from crypto native platforms like Polymarket keeps surging. The irony is incredible. Prediction markets are literally one of the most successful crypto use cases, and now TradFi wants in because they see the money flowing. Jamie, welcome to the party. You're about 5 years late, but we'll save you a seat. Citadel's crypto exchange EDX Markets just applied for a U.S. trust charter, which is basically asking to become a regulated bank for institutional crypto. EDX is backed by Citadel Securities and other Wall Street heavyweights, and this trust charter would let them massively expand their institutional services. This is the Wall Street playbook. Build the regulated rails, get the charter, then open the floodgates for institutional capital. When Citadel is building banking infrastructure for crypto, the smart money thesis is officially mainstream. The Fed just put stablecoins on blast. Vice Chair Michael Barr came out today saying stablecoins need much tighter controls to fight money laundering, which basically signals that new regulations are coming for Tether, Circle, and every other stablecoin issuer. Stablecoins move over $10 trillion a year now, and the Fed clearly thinks the current guardrails aren't enough. Whether you think that's necessary oversight or government overreach, the writing is on the wall. Stablecoin regulation is coming, and it's coming fast. Altcoins are absolutely ripping today. Bitcoin punched above $69,000 with a 1.6% gain, but the altcoin market stole the show. Algorand surged over 10%, AVAX climbed 4%, and the entire CoinDesk 20 index moved higher. The broader market got a boost from easing geopolitical tensions, with the S&P 500 also jumping nearly 3%. When stocks and crypto rally together like this, it usually means risk appetite is coming back in a big way. Keep your eyes on the altcoin charts this week. Jack Dorsey just fired 4,000 people from Block and then said AI should replace middle management entirely. The Block and former Twitter co-founder made the comments today, arguing that corporate hierarchy is outdated and artificial intelligence should handle what managers used to do. Look, Jack has always been the burn it all down and rebuild type, but telling 4,000 people they're being replaced by robots while you're still paying yourself is a bold move. Block stock barely flinched though, so Wall Street clearly agrees with him. The crypto industry, which Block is deeply embedded in through Cash App and its Bitcoin operations, is watching closely. Before you go, don't forget to check out Compete Token, the gaming crypto with real games, link in the description. That's your crypto pulse for April 1st. Stay safe out there, and we'll see you tomorrow.